Hello and welcome to Unblocking the Chain. I'm Ash Cooper, and today we're diving deep into the world of investment management, focusing on the innovative strategies employed by JellyC. I'm joined by Michael Prendiville, the Chief Investment Officer at JellyC. There has been a lot going on in the globe, both at a political and economic level. With some potential strong headwinds for the macro environment, it seemed prudent to catch up with Michael to get his latest thoughts on everything that is happening. Michael, let's kick things off.
G'day, Coops.
You've been travelling a lot and meeting many investors. What's your feedback from those events and those meetings?
Well, Coops, it's a good question to start with. And can I just say how majestic you're looking today? Up in Singapore recently for Token 2049. Fantastic trip. Met a lot of people. Paid $500 US for a ticket and didn't get to the conference once. That's because there was so many meetings going on in the background. There was one thing that did come from it was the fact that Singapore is electric. There's a lot going on up there. You can really feel the momentum of crypto in Southeast Asia. So there's a bit of a contrast to what's happening in Australia. The take-home for us is that more needs to be done in Australia to push crypto forward from a regulatory perspective. Up there, they're on the front foot. Down here, we're on the back foot.
So what does that mean on the front foot? I mean, obviously, I think there's creators and innovators in crypto everywhere. But what does the front foot mean? Is that a government thing? Is it, an institution thing?
Yeah, so it means the government gives us clear guidelines as to how we're going to approach the industry. Okay, so clear guidelines for the exchanges, clear guidelines for the stablecoin issuers. Australia has been held back because we don't have an active stablecoin. Once the active stablecoin comes in, then everything else can move forward from that point. Okay, so we need one of the political parties to move the regulation forward so we can all get on the front foot and start really pushing the industry so every Australian can benefit.
Yeah, I'm hearing very similar things out of the UAE, etc. as well. They're probably ahead of Singapore. So it's it seems to be a little bit of an arms race going on, right? If you're too far behind, you don't want to get too far behind.
The other benefit from Singapore, and there was was we met a lot of other funds up there. So from our perspective, assessing what the other funds are doing is a big thing. If there's someone that's performing better than us, we want to know what they're doing and why we're not performing as well as them. So we're very competitive people at JellyC. We want to be the best of the best. So we have seen some strategies up there that we're not deploying within our funds, which we think would be beneficial to all of our investors and would put us in a class above and beyond anyone else in Southeast Asia and Australasia. So that's what our focus is going forward, is we'll be trying to adopt those policies.
Yeah, I think that's interesting, and we'll get onto that, later in the show about sort of, potential sort of M&A and growing the geographic footprint of JellyC and the strategic reason for that. But I think probably the most pressing thing at the moment is, what's happening in the world, right? The US elections, everyone's an expert on the US elections now. Clearly it's getting a lot of airtime. And with that, becomes the pro-crypto or not as pro-crypto, depending on what party you're following. That's probably the first question, and I'll get more specific.
You better stop there, Coach, because I'll forget. If you ask me too many questions, I might forget.
Yeah, so my question is how are you thinking about the US elections at the moment? 21 days out.
Yep.
A lot of headlines, about everything, and then a lot of headlines about digital assets.
Yeah, okay. The Republicans, a.k.a. Donald Trump, is definitely crypto positive. He's come out and he's basically said he's going to build a Bitcoin reserve. So any Bitcoin that they confiscate will be put into a reserve and won't be sold down. Okay, there's a number of other things that he's come out and said. I mean, he even bought a burger the other day using Bitcoin. Okay, he has every sense of the way from a long way out. He has identified the fact that he's on the front foot in terms of crypto innovation. Okay, so we know without a shadow of a doubt that Donald Trump, if he is the president, he will be positive for crypto. Now, let's compare that to the current administration, which is the Biden administration. They have been choking through Operation Choke Point 2.0 the crypto industry. They have been enforcing the crypto industry not through regulation, but by absolute pain points, by fining them. Okay, the last figure I saw was between $25 and $30 billion worth of fines to the crypto industry over since 2017. Okay, that is pain in anyone's language. Kamala Harris, she has to be associated with the Biden administration. So we associate her by default. She has to come out on the front foot and she has to let us know exactly that she is deviating from the Biden administration. And the only way she can do that is by actions, okay, and clear and transparent direction. She hasn't done that yet. Okay, she was supposedly going to do that. When was it? On Tuesday, so last night. She had an opportunity to come out and clarify exactly what their policies were going to be in terms of regulation and having a definable strategy in crypto. She hasn't done that. So, in answer to your question, Donald Trump is positive for crypto. Kamala Harris is not positive for crypto at this stage.
So the question then is, now 20 days out, what's priced into the markets? Is the Donald Trump victory priced in? Is the the Democrat victory priced in? What is the market reaction 20 days, 21 days when we get the result?
Yeah, so we follow the market on Poly Markets, which is a very live predictive markets. And the last odds that we saw were Donald Trump was close to 55% and Kamala Harris was 45%. Okay, so I think it's even blown out even more just recently. Okay, so it looks like Donald Trump is starting to pull away, and the market is starting to factor that in. So you see Bitcoin has broken through 65,000, is up around 67,000. I would expect that if Trump continues to pull away, we will see new all-time highs. And if we see new all-time highs, there is going to be a lot of people reaching to buy Bitcoin.
Okay. Yep. So through the 72, 73 mark.
Through 74,000, 74.5, I think we have a clear line of sight for 100,000.
What's your gut feel on time frame?
So I would say the last quarter of this year.
So this year, 100,000.
This year, hat on hand, if Donald Trump gets over the line, I would say that we will be testing 100,000 in Bitcoin. And that will lead to, rising tide lifts all boats. So it'll lead to all the alts starting to move as well.
Yeah. Makes sense. And this sort of segues into the next question, which is economic policy, financial perspectives and liquidity, right? Mm-hmm. So I think our house view is that, liquidity and, expenditure will still occur under either party. You can go to the minutiae of that. What's your thoughts on, we've seen interest rate cuts from many central banks and a lot of people talking about it or slowing down, including Japan.
Yep.
What's your view globally, macro, interest rates and the liquidity that we're obviously seeing starting to tick up?
Yeah, so let me just qualify that question for a second. You've just mentioned Japan in that question and their hiking rates. So that's not adding to liquidity, that's actually taking away from it. But in September, we saw the greatest amount of central banks dropping rates, including the Fed, which dropped rates by 50 basis points. China came out with a stimulus package. So that has added to liquidity, and that is a positive for crypto. Okay, the more money in the system, the more money that can be deployed towards crypto. What does lower interest rates mean? Okay, lower interest rates potentially means, obviously, in terms of traditional finance, money moves from traditional finance and money market funds, and it starts deploying in crypto. So let's talk about the yields that can be gained in crypto, which are not correlated to any of the traditional finance yields. Okay, so the basis, what's happened is that when people demand Bitcoin, okay, they start and they leverage, so they start to borrow Bitcoin, the basis, so the futures, starts to blow out. Okay, so as traditional rates come off, you see the basis yields start to blow out. You've seen it go from around about 5 to 5.5% in the 3-month basis out to 10%. Okay, so that is a positive thing. Okay, you'll see money move out of the traditional money market funds and start to move into crypto. That's what is happening at the moment. And so that flood of money doesn't happen overnight. It's going to take some time to deploy. That's why we'll see a movement toward the 100,000 in Bitcoin, especially if Trump gets it.
Yeah, so just thinking about that and simplifying that, rate cuts, more liquidity, the underlying spot market goes up, so Bitcoin higher. Mm-hmm. But as rates get cut, interest rates get cut, mm-hmm. people are looking for alternative forms of yield.
Yep.
And digital assets offer a substantial form of yield over traditional finance.
Coops, you've hit the nail on the head.
Correct. So what would you, obviously, the first mover could be, let's call it spot Bitcoin, alternatives follow after that.
Yeah.
What would you be watching to see the decentralized or digital asset yields, become attractive?
Yeah, so we generally watch the near contract. So that'll be December 27 on the futures side, and that's trading up towards 10% at the moment.
And what would be your target to sort of, start to lock in? Maybe not lock in all of it. What would be a target yield?
Yeah, so if we were talking about the alternative income fund within JellyC, and when we're starting to lever up, i.e. deploy more than a 1-for-1. So at the moment, I'll give the listeners a sense of how we do it. So the basis trade is, for instance, buying spot Bitcoin and selling the futures and just writing that into maturity. Okay, now on a per annum basis, we're looking at a yield of 10%. Okay, if that were to get up to 15%, we might lever up, 2 times. Okay, if that were to get to 20%, we might lever up to 3 times. Okay, so 3 times leverage, let's say the cost of borrowing is, let's say, 5%, okay, and we're locking in 20%, okay, so that's 15% that we're locking in. If we do that 3 times, okay, we're talking about locking in potentially a rate of around about 45%. So you can see the attractiveness there. Of course, you need to risk manage that position, because if that were to blow out to 50 or 60%, you need to make sure that you have the collateral on hand to be able to withstand that move. Okay, so it's not a matter of just closing your eyes and locking in that 45%.
The interesting thing, I think obviously the yields are amazing. There's a lot of yield product out there at the moment, private credit, private debt, whatever you want to call it. I think the interesting thing about this is not really correlated to anything else, right? And conversations that I've had and that we've had with wealth and certainly investment managers is that, if I can find correlated risk to a very vanilla AAA type product, they'll do it and they'll leverage it. If it's non-correlated, they're very interested in it.
Good question, Coops. In terms of the correlation, do you know what? There's a lot that can be going on in this sector. The basis trade is completely uncorrelated to, traditional finance. When we look at a portfolio, we think about the number of investments that are in, traditional fixed income or, some type of, deposit, type instrument within a portfolio. Okay, if you talk about any wealth manager, a good 30 to 40% of their portfolio will be in fixed income products. Okay, that are correlated to traditional finance, and then you have your equity correlation there. This product, so the alternative income fund, is totally uncorrelated. We would expect at a point in the future that 6%, a minimum of 6%, will be put into this type of strategy. It's completely uncorrelated. The investment managers, so the wealth managers, can get comfort that irrespective if rates come off, okay, and for instance the bond prices go up, the yields on the basis side are going to stay elevated. Okay, so I would say there's 2 points here, okay, from a portfolio perspective. One is you're allocating 6 to 8% to something like the alternative income fund, which is uncorrelated to rates. And then there's the investment in the long-only crypto side. Okay, so I think we've sort of touched on 2 points there, but yeah, one's uncorrelated, the other is correlated to risk.
That's what everyone's looking for, uncorrelated income risk at the moment.
Yeah.
Outside there, risk on or, price goes up portfolio.
Yeah, it took me a bit to get that out, but we finally got there.
Good you got there, mate. So let's just step back because this is what everyone's talking about, both in the digital space and whether you're talking sort of high-octane equities. What are your thoughts, 6 to 12 months, interest rates, liquidity? I mean, is this a, 3-month phenomenon, inflation's going back up, or are we going through a cycle where the globe starts cutting rates, essentially?
Well, that's a difficult question because obviously expectations are that rates are going to continue to come off. And in Australia alone, RBA's on hold because, for instance, inflation still hasn't moderated. It's still not, down towards its 2 to 3% band. So it doesn't look like anything's likely to happen here in Australia. In the US, inflation is dropping. So they are able to, drop rates, 50 basis points at the last meeting, another 25 built in for October, and then another 25 for November. I think that's right. But another 50 basis points in the upcoming months. Okay, so to me, it feels like, the momentum for rates is lower. However, we do have the presidential election in the States, and US rates are a good barometer of what's going to happen around the world. Okay, so Donald Trump gets in, which it is looking more and more likely. What impact is he and his policies going to have on interest rates? I think the Fed will be, they'll be looking to do one more drop, and then they'll be wanting to certainly see what happens with Donald Trump. He has some, unconventional policies. The other thing is that Donald Trump has made it apparent that he wants to take some of the independence of the central bank away. So that's something which we haven't ever seen before. So we don't know what impact that's going to have. So we are going into a period of, unconventional time, unconventional rate setting. We just don't know what's going to happen.
What we do know is there's not going to be any belt tightening, right? More bonds in the US,
yep,
and maybe, some other countries in the West will have to be issued.
All roads point to more spending. It doesn't matter whether it's the Democrats or the Republicans. All roads point to, an escalation of the debt that is coming through in the US. So I guess a good question would be, at what point do offshore investors signal that they have had enough exposure to the US debt market? When does that happen?
I think that's a whole nother, interview. You could go down a very big rabbit hole here, but just from simple economics, there's going to be a lot more supply of US treasuries. And the question really is who's going to buy them?
That's right.
And I think that's probably the job of the Treasury at the moment is who is going to buy them, or another way of looking at what yield do they have to be issued at for people to buy them.
Well, a quick answer to that one would be the entity that is accelerating in that space, that is absorbing a lot of the US Treasuries, is Tether. It is quickly building their war chest in terms of US Treasuries.
Just explain what Tether is.
So Tether is the company that is behind the stablecoin USDT. Okay, and USDT has a market capitalization of 120 billion. Now, underpinning that stablecoin, so a 1-for-1 is actually overcapitalized, but is US Treasuries.
Yeah. So potentially stablecoin companies could be
could be the biggest buyers of US Treasuries going forward,
because they're not really. I mean, yield is a big part of their revenue, but they need to be essentially backed.
Yeah. So, for instance, Tether is the most profitable company in the world per employee. Okay, so last year they returned around over a $5 billion profit, and it's looking like it's going to be a hell of a lot more this year. The way they make money is, there's $120 billion worth of USDT minted out in the world, and Tether have that backed in US dollars, and they've invested that, and they're earning a yield on it.
Yeah, so if US Treasury are at 7%, or if US Treasuries are at 3%, they're still buying US Treasuries, right?
That's right.
So it's not a discretionary portfolio like a lot of investment managers. They still need to have it as a backing the USDT.
So generally what will happen, people that want to come into the crypto market, their first, especially in the US, their first move will be to convert US dollars into USDT or USDC, so Circle's stablecoin. Okay, from that point, then they buy Bitcoin or Ethereum or whatever they're going to buy.
Okay, so let's move into strategy, JellyC strategy and growth plans.
Very exciting.
So exciting news about a recent hire that you've made, partnering with the DFCRC. Do you want to give us an update on that?
DFCRC is represents the Australian government have made a contribution to a body of around about 150 million, and through that body they subsidise staff. Okay, so we're looking at taking on a PhD student who is highly qualified in machine learning, deep learning, and AI. Okay, so we'll bring him into JellyC, and he will innovate our funds. So we were all able to, for instance, scrape data off the web real time amongst, for instance, all of the protocols and all of the networks out there, and to be able to take it a step further with the machine learning side. So if there's themes that are involved, we can move from theme to theme, and the machine learning side of it will automatically do that for us. Okay, so AI within crypto is really starting to boot off. There are specific networks that are dedicated to, facilitating AI in the future. Okay, whereas there's going to be a point where AI transacts with AI.
Yeah, so I think everyone talks about AI and crypto as as the payment rail for AI making payments. I think using AI to sort of identify and risk manage and identify portfolio is very interesting.
Yep.
Do you think many people are doing that in the digital space at the moment?
No. And I think if you plugged in what's the best portfolio in crypto to invest in, it's not able to spit out an answer at this point. Certainly not in Australia and not in the US. There will be tight guidelines, but at a point in the future, there will definitely be a point where people will be asking AI for assistance on their portfolios.
Yeah, I think at the individual that's fine. My guess is there's a lot of AI going on in the traditional markets, right?
Yeah, that's right.
A lot with good data and clean data. So let's sort of some closing thoughts. Advice for investors in this space. What advice would you give investors in the current market landscape for the next 6 to 12 months?
My advice would be to invest in a very, very, very good crypto fund or crypto investment manager like JellyC, unless you are willing to give 100% of your time to dedicate and throw yourself into crypto, because you need to be in the weeds to be knowing exactly what's going on. Okay, so a tip aside from that would be for the novice investor, timing is everything. Okay, and if you're looking at a way to time the market, I would stick to the fear and greed index. And if it gets below 10, that's where I'd be buying. And if it gets above 90, that's where I'd be selling.
That's a very comprehensive overview. It's clear that there's a lot going on, and monitoring market closely is probably as crucial as it's ever been. JellyC's had a pretty busy, last quarter and looks like to the end of the year, and a very strong strategy going into 2025. So well done.
Coops, could only do it if you were with me.
That's all for today's episode. Thank you very much, Michael, for sharing your thoughts and insight into JellyC's strategies for the Q4 of next year and how you're approaching the current market. Thanks for our listeners for tuning in to Unblocking the Chain. We'll be back in 2 weeks with another episode. So make sure to subscribe, rate and review and show on your favourite podcast app. If you want to learn more about JellyC or any of the topics we discussed today, please reach out on the relevant links below.